guys, it's your boy Toby. Welcome to our course of Forex Trading. In case this is your first time of meeting us, this Forex Trading Academy, a Forex Street Academy. Should in case you're new here in our channel, we we ask that you subscribe to our channel in order to get more notifications. Although this like the part 6 of this training section. So what we've done is that we've picked most major currencies or major subjects that are really informative in forex trading career. So what we did is that we started from that of the kindergarten stage, and now we are in junior secondary school, as you could see over here. And then GSS1, here we're going to start with treating GSS1. But then before we start with that, we're going to look at the next subject we're supposed to be treating in this event. So it said pattern schematons. And under pattern schematons, we're going to get a clearer understanding of what it means. So in this case, we're actually talking about chart patterns. Now in this lesson, you will add yet another weapon to what you've been getting from our channel. Just in case today is your first time of going through this section of training with us, you might just want to look underneath the description. There you get the part 1, 2, 3, 4 and 5 of this same forex trading tutorial. Okay, now let's begin. It's a think of a chart as a landmine detector, because once you learn this, you will be able to spot explosions on the chart before you then even know what's going to happen next in the world's market. Now making you, and also that which will also make you a lot of money in the process. Now in this lesson we will teach you the basic chart patterns and formations, then correctly identify, or when correctly identified, it usually leads to a huge breakout or explosions in this case. Now remember, our whole goal is to spot big movement before they even happen, so that we can ride them out and rack or rake and rake in the cash. Now chart formations will greatly help us spot conditions where the market is already, or where the market is ready to break out. Now here is the list of all that we're going to be trading. Here is the list of all the patterns that we are going to cover. And then here we have the first one: symmetric triangle, ascending triangle, descending triangle, double tops, double bottoms, heads and shoulders, reverse heads and shoulders. So these are the major topics we're going to be treating in the course of this event. So here we're going to first start with symmetric triangle. Okay, so what is symmetric triangle? Symmetric triangle are charts formations where the slope of a price, slope of a price highs and the slope of the price lows converge together to a point where it looks like a triangle, as you can see over here, where it looks like a triangle here, and you could see from the bottom here and then from the top. Now this looks exactly like the triangle. Now, what is happening in this area is, now during this information, this is the market. Okay, this information is that the market is making lower highs and lower lows. Now this means that neither the buyer nor the seller are pushing the price far enough to make a clear trend here. So in this if this was a battle between the buyer and the seller, then this would be a draw, because you could see over here, not the buyer or the seller were able to push the price towards their direction here. Okay, so this type of activity is actually called consolidation. That's what you see here. You could see over here, you see lower highs and then lower lows here, and then you see the arrows broken forth to the bottom side. That explains the market might actually break through this part, the bottom part, or better still break through the fourth part. Now in this chart, you can see that neither the buyer nor the seller could push the price in their directions. When this happens, now we get lower highs and lower lows. As these two slopes get closer to each other, it means that a breakout is getting near. So we don't know what direction the breakout would be actually, but we do know that the market will break out eventually. Okay, so one side of the market, and when that is done, one side of the market will definitely give in to the other. Okay, so this is how symmetric triangle actually works. So how can we take advantage of this? Okay, now it's very simple that, okay, we can place an entry order above the slope of the lower highs and below the slope of the higher lows. Since we already know that the price is going to break out, now what we do is that we can just hitch a ride whatever direction the market moves. Then you will see a happening in this form. So whichever direction the market moves, if the market decides breaking up, that will be beautiful. If you decide breaking down, that also will work. But then we have to make sure that we set or we place our entry order to in order to be able to get the market accurate movement. Now here you could see over here on the screen, say price breakout of the triangle and make nice move up over here. So looking at this diagram here, you find out that later, after some hours thereabouts, the market break forth to the top side of the triangle. Now in this example, if we place an entry order above the slope of the lower highs, we would have been taken along for a nice ride up, isn't it? Now if you had placed another entry order below the slope of the higher lows, then you would cancel it as soon as the first order was hit. So this is how it works. Also, we are going to be discussing the next section, which says ascending triangle, and then we're going to be talking also about types of formation. Now ascending triangle, this type of formation occurs when there is a resistance and a slope of a higher lows. Now what happens during this time is that there is a certain level that the buyers cannot seem to exceed. However, um, they are gradually starting to push the price up, as evident by the higher lows, and then that's just it. So over here you see it said here the price was able to move up, and then that is just it. Price has been unable to break out this level, which is the level you see over here as a resistance here. This one says higher lows, and then you look down underneath here, it said the buyers are slowly starting to win this battle. How did you know that? Now looking at the trend here, you could find out that the trend is gradually trending to the up direction. Now looking at the next diagram, you find out that the markets make a huge breakout here, and then in this chart above, in this chart here, you can see that the buyer are starting to gain strength because they are making higher lows. Now they keep pushing the pressure on what resistance level, and as a result a breakout is bound to happen. That is what you see over here. Now the question is, which direction will it go? Will the buyer be able to break that level, or will the resistance be too strong? These are questions that we ask. Now books many charting books will tell you that in the most cases the buyers will win this battle. Why? Because of the trend. Now in the price, now if the price breaks out past the resistance. However, it has been my experience that this is not always the case. Now sometimes the resistance level is too strong, and there is a simple, or there is simply not enough buying power to push it towards the direction that you, the trader, actually gets. But in this case, you have to be patient enough to make sure that you get an accurate entry, whether the market will make its way back down here or to make its way back up, and then just continue going forward like you see over here. And then also we're going to be, now most of the times, the price will in fact go up. The price will in fact go up because of the trend. Now the point we are trying to make is that we do not care which direction the price goes, but we want to be ready for a movement in either directions. Now in this case, we would set an entry order above the resistance line and below the slope of the higher lows, which is this level that you see here. And then just in case the market makes a breakout, you see yourself in dancing and celebrating the profits you'll be making out of this trade, out of this single trading. And also we're going to be talking about ascending triangle. Now the ascending triangle here, and now you see that from what we learned from the previous ascending triangle here, you could see that in this case the market broke up. In this scenario, the buyer won the battle, and then the price proceeded to skyrocket. Now ascending triangles are, as you probably guessed, descending triangles are the exact opposite of this same thing that you see over here. But then this is ascending triangle, and then over here, if you look at the action that has happened, it said the price breaks resistance and continues to move up. In this case, the buyers win the battle. So that is what we explained before now here, that because of the uptrend, now looking at the market from where the market moved from, you could see that the market is headed towards the up side of the trend. So you could see over here the market broke and made its way up to the very highs over there. So in this case, just guys, if this is your first time of listening to us on YouTube, if this is the first time of coming in contact with us, I acknowledge that. You please hit on the subscribe button and that of the bell icon so as to get notified whenever new videos comes up online. And please guys, we're also going to be talking about descending triangle. In the next tutorial, we're going to be talking about descending triangle. We are going to be showing you how it works.